Che Yusuf. It's Yusuf. I am the assistant sales manager at 360 Capital. But the most important is today to actually go into the market and see what the next opportunity that actually the market is presenting to us, based on the information, based on the technical analysis, and again, based on the events, or we can say the news that are actually the fundamentals that are actually coming for the following week, right? So this is not the signal, or this is not information that actually tells you, to execute the market or to trade in this way. This is just the information based on education, to have a little bit of knowledge in terms of the Forex market, or in terms of the market, how it works, right? So yeah, this is my idea, how I think the market is actually performing at particular time, or how I think the market is going to perform the following week, right? And based on the information that I got from the past week that actually passed. So today is the 20. I'm recording the video on the 24th of Feb 2022, right? All right. So first of all, when it comes to the markets, first of all, I think it's very, very important to say that we should be able to understand the market based on the past history. So in order for you to actually identify the opportunity that you see in the future, or that you can be able to see in the future, you need to understand the past, how the market has been performing for previous, week or previous days and so on, right? So before I go there, I think I need to, most of all, I need to go look in terms of the high impact volatility, the fundamentals. The reason why we look on the fundamentals when we want to actually analyze the market is because the market is driven by the fundamentals. Without the fundamentals, without those economic news, economic events, economic engagement, economic meetings, there's nothing like a market. The global markets, it's actually moved based on those information that comes. So it's always important to make sure that we go through in terms of the fundamental, we look at the fundamental, we see how the fundamental are actually performing, and then we can now transfer that knowledge or that information all the way to the chart, all the way to the chart, and then we can be able to analyze. All right. So I'm going to stop sharing here, and then maybe just go and actually, share in terms of the fundamentals. So when it comes to fundamentals, what we actually do is go to, the website that actually produced the fundamentals news, right? It's a Forex Factory. And I believe that from Monday, there will be different fundamentals, but we are looking the high impact volatility fundamental. The reason why we are looking for high impact, because we want the movement. We want to make sure that the market is actually moving. The market is actually performing, right? And without that, where you're going to be able to trade without actually understanding the volatility of the market? Because otherwise you stay in a trade for 2 to 3 days and the trade is not moving. Maybe it's just moving a bit by bit. So you waste your time for just staying in a trade, without actually making anything. I think the most important is to look about the fundamentals and look about the high impact volatility of the fundamental, and then focus on those type of instrument. So if we can look at Monday, the Feb 26th, we can see that the only actually, in terms of a high impact, we're gonna see it's a new home loans, right? It's actually from United States, 5 p.m. new home loans. Again, on Mondays, most of the time the market is actually, low. And again, the market movement is also very slow. So most of the time you find Mondays, there's a bank holidays from Canada, there's a bank holidays maybe from US, bank holidays, or maybe from Europe, right? The biggest fundamentals starting picking up from actually Tuesday, moving all the way forward, right? So when you get to the Tuesday, the high impact volatility that we're seeing, there's a 3:30 p.m. here on the US, we see called durable goods orders. This is not that much high impact. As you can see, even the color there, they're not showing that red, right? There's not that much in terms of a high impact volatility. But again, it gives a little bit of a movement because it's a medium high impact volatility, right? It gives a little bit of a move, or it gives a little bit of idea where if you focus at that time on an instrument of $1, then you can be able to say that, okay, I think this market is going this way, or I think this instrument is going, this direction. So there's a durable goods orders that are coming month to month on Tuesday, 3:30 p.m. Going on later on in the US, there's a CB consumer confidence, right? Again, I want people to understand the reason why we think we have to, pay attention on this. Why traders care about, this type of CB consumer confidence is because the financial confidence is the leading indicator of consumer spending, which accounts for majority of overall of economic activities, right? So it accounts for the majority of economic activities, which is the CB consumer confidence, gives the confidence to consumers in terms of the buying power or the buying purchase. Okay. Moving on, that was the last one on Tuesday. I think there's another one, Richmond Manufacturing Index. Richmond is one of the biggest in terms of the news, or in terms of the company that actually come up with a report of manufacturing index. It's very, very big, Richmond. If it started like this, I think the whole 2 weeks we're going to hear about the Richmond and how the Richmond is actually performing at the moment. Okay. All right. So moving on Wednesday. Wednesday, we are actually seeing the CPI year to year from Australian dollar, which is also a high impact volatility here. Going on Wednesday, 3 a.m. This is a Sydney session. We're seeing official cash rates. We're seeing also RBN monetary policy statement. We're seeing also monetary policy statement. Okay, it comes on a 3 a.m., which is a Sydney session. To those who like to trade early in the morning, Wednesday, there's opportunity there to kill Australian dollar as well as New Zealand dollar, right? And moving on Wednesday later on 3:30 p.m., that's where we're seeing per annum GDP from United States, bringing us the gross domestic product. This is a lot of people, they understand how the gross domestic product actually works. And if we do, we should also understand that this is one of the news or events or fundamental that drives, the global market. It can drive the forex market. So these are the times where you look into a US instrument, you look into UX indexes like NAS 100, which is NASDAQ. You can look into US 30. You can look to Dow Jones, which is S&P 500, just to make sure that you see some kind of movement, some kind of volatility, and it's happening on 3:30 p.m. On Wednesday, 3:30 p.m. GDP from US. Opportunities there, opportunities for people to actually, make some money, people to actually get opportunity and get into a market and start actually making cash. On Thursday, there's not much in terms of Thursday. We're seeing in the 2:30 a.m. on the Sydney session or Asian session, retail sales from Australian dollar. Obviously, is from the Sydney session. Moving on later on, there's a German per annum CPI. It's actually all-day events in terms of German. And we are expecting instrument like a German 30 to have some movement there because of its instrument. It's actually indices from German. And we're expecting a lot of companies, from German to fill the consumer price index that will come out from German. So German 30, look out for German 30 on Thursday, the whole day. Just pay attention on the German 30. Thursday, later on, there's a Swiss franc GDP also coming on. Not that much high impact, but again, it's a Swiss, we need to pay attention on that because of it is they call it a safe haven for a lot of instruments. So it is very, very important to pay attention on a CHF instrument, right? Moving on Thursday again, we're seeing Canadian GDP coming on. We are seeing also US core price index, which is 3:30 p.m. with the Canadian GDP. So on Wednesday, 3:30, Canadian dollar is going to have a high impact volatility for sure. Core price index from United States instrument is going to have high impact for sure as well. Instrument like NAS 100, US 30, S&P 500, gold, a dollar index, gives you the whole idea of how the dollar is actually performing. So very, very important to pay attention on this particular, instrument that we're talking about based on the fundamental, how it's actually presenting to us. Going on Friday, there's a manufacturing PMI from China, 3:30 a.m. on Friday. Those who actually trade, Chinese instrument like CN50, which is China 50, it's an index from China, combination of 50 companies registered on CN, on Chinese instrument, and being traded on Hong Kong Stock Exchange. Very important. Also, there's JP225, there's a Hong Kong 50, there's Nikkei there that you can even pay attention and actually, spot some opportunities in the market and trade. Going on Friday later on the 5 p.m., we are seeing ISM manufacturing PMI coming from United States. Again, we're expecting a lot of dollar index to have a high impact volatility, to have a high movement in terms of the market. So this is the fundamentals that we actually, looking forward for the following week. I think it's going to be very, very busy week regarding fundamentals that are coming. We're seeing the GDP from Australian dollar. We are seeing the GDP also from Canada. We are seeing a lot of instrument GDP as well. CPI from Australian dollar. We are seeing as well what you call Chinese CPI as well. So there will be a lot of a lot of instruments, to be honest. So now we are back in the market. We want to transfer that information that we got from the fundamentals into the market, right? Right now, the market is not moving. Definitely, it's because of the market has closed, and it's very, very important to look on the market, especially when the market is actually closed, so that we can see the previous what the market has been performing. So, what we do, first of all, we look into the fundamentals that we actually, see, right? So from the top of the fundamentals, I think there was a CB consumer confidence that comes from US. I think volatility started from Tuesday, right? So we're gonna look from any type of, maybe let's say look to Euro USD, right? This is Euro USD. The reason why we're looking at the Euro USD is because of Tuesday, there's a consumer confidence coming from US, and Euro is being correlated with the United States dollar. So it's very important. We're not just looking at, any type of instrument. We are actually focusing and pay attention to a specific instrument that has the fundamentals, right? So it's very, very, very important to do that. But before we do that, let's go on a bigger time frame on a Euro USD. There's something that I want to, to actually to show you guys in terms of how the market has been actually performing for the past week, right? So if we go to a bigger time frame, we're going on a daily time frame, we can see that this was CPI coming all the way down to here. All right. All right. So if we look past in terms of the past history, last week, how has been the market perform? We saw CPI from United States coming on. We saw also consumer price index from US. We saw also PPI, producer price index, coming on in terms of Tuesday. It was last week, Tuesday. Then Friday, last week, Friday. That's where we saw PPI, right? And this volatility that you are seeing here that pushes the price all the way down, this was consumer price index. So it shows last week on Tuesday, the market actually pushed the price all the way down, right? Then the market started collecting, and then it comes on on Friday on a PPI, it pushes again the price down, and then the following week, which is this week, the end of this week, which is this week, then it started the market to push all the way the price to the top where it was, right? So what it actually means is that no matter how much the report is coming from consumers, that the consumer, they've been surpassed the estimation in terms of buying power, it's actually give us the positivity, right? Because of, if you look at it, it's euro against US dollar. And now US dollar is a base currency. It's actually quote currency, quoting the base currency, which is euro, right? But you see it falling. What it means is that the dollar is the one that is actually gaining a little bit of momentum, right? And it pushes the price all the way up to 1.08975. And you can see that Friday, which is yesterday, tries the market to pushes the price down, and it ended up on 1.08213. Okay, so now where do I think a higher possibility the market can go, right? This is, and it can actually, it shows you the market. You see how nice about the market, it does shows you the possibility of the next future. This is all the space where the market actually think it has to recover, right? So if we go, let's say, for example, put in some arrow so that you can see. All right, cool. So pretty much, if we go to 1 hour, pretty much this is the space that the market would like to actually, turn and recover, right? And if you see, if you look at it, there's a couple of actually a move that a lot of people you can take advantage. Okay. Here we go, right? So this is what I'm thinking. The market can possibly, push the price down of Euro USD when it comes to when the market opened from Monday. But this is the opportunity where I can say this is where I can put my take profit number one, right? If I'm actually jumping in a market, then I get another maybe identification of where the market has resisted to a certain point, and then I put another another TP, all the way anticipating to this. But the reason why I'm putting the range or mark on this market is to identify so that you shouldn't be able to risk that much and you end up losing money, right? But you can say that, okay, from now to there, I can make money. Once it gets there, it's whether I can close my trades or I can enroll more trade in that account, especially if it breaks these positions, right? Once it breaks this position, this is opportunity for you to enroll more trades. Goes on this position. Once it breaks in this position, this is opportunity for you to roll more trades, right? And the more you are actually studying the market on where the market has been resisting or where has been spending more time, I call it spending more time because the terminologies of Forex, it actually confuses a lot of people. A lot of people, they think this is different, this is something else, but definitely it's the same thing. It's just have a different type of terminology of pronouncing. So this is what I'm looking about Euro USD. Even if we go on a 30 minutes, we can see. Now, why don't I think the market will go above? Personally, I don't think the market will go above because of when I go to 4 hour, it identifies me that this is where it's coming from. The market actually trying to touch at this position, but it resists, pushes the price down. So it does want to push the price all the way down, right? And if you go to 30 minutes time frame, you can see that the market is actually, it can actually push the price all the way down. So yeah, that's Euro USD. Euro USD. The reason why we check Euro USD is because of what is happening on Tuesday, the CB consumer confidence, right? And again, when you get to Wednesday, that's where we're seeing CPI from Australian dollar. So we got to look for CPI from Australian dollar. All right. Okay. So let's look into AUD USD. AUD USD. Australian dollar versus United States dollar. Again, you can see the market. We put it on an H1, or maybe let's put it on a 4 hour. Right. Now, we need to identify the highest position of the market, and then where the market has spent a couple of times. The reason why I'm identifying this position is because of here, not because of where the market has been, performing in the past week, but because of previously. Remember, the history of understanding of the instrument that actually gives you the sense of the next movement of the market, right? If you got it there, you got it. Trust me. All right. The another thing, we identify another positions where the market has been spending a little bit of time, spend a little bit of time, spend a little bit of time, spend a little bit of time. But we can see that there's a lot of gaps that the market is trying to recover, right? That the market can, or trying to actually possibly recover. So when we go to H1, because of where the daily traders, most of people they're the daily traders. So we go to H1. Pretty much we can see that the market is sitting above in terms of Australian dollar versus Canadian dollar. Let me see on 15 minutes. All right. So this is another position. See. Now, in terms of technical analysis, when you study this, right, it actually tells you a double top, right? A top and a top. And then it actually gives you again a double bottom, a bottom and a bottom. It forms a top, forms a top, forms another top, right? Immediately when it forms a top, and especially it's a double or triple top, the market will drop. Right? But now immediately if it forms the bottom, look how after it forms this one, come back and form this one, where the market is going up. It actually trying to push the price down, but it doesn't because of its respecting the technical analysis that the market has actually formed, right? So now this is the higher possibility that the market can go trying to recover. Let's say when, here we go. Yeah, this is what I'm thinking, that the market maybe can try to actually push the price all the way up to 0.65804. And then from there, you can actually monitor your trades, whether you take your profit from there. Because even if you go on a 15 minutes, it's a couple of some move that is showing you it goes there, touches there, then it brings the price all the way down. Then later on of the week, maybe during Tuesday or Wednesday, it might break at this position and come to 0.65420 to this position. So that's what I'm thinking in terms of Australian dollar versus United States dollar. And the reason why I'm looking at AUD is because of CPI that is coming on Wednesday from Australian dollar. Again, on Wednesday, there's a GDP from, there's a GDP from United States dollar. A lot of things is going to happen. We are looking at NAS 100. NAS 100, if you look at it right now, it actually closed the price on the market above 17,914, which is really, really high, to be honest. Yesterday touches 18,118. My opinion in terms of NASDAQ, in terms of NAS 100, trust me, I believe that NAS 100, it want to touch to 20,000. It hasn't been on the 20,000. This is going to be the all-time highest ever. And if you look at in terms of how the indices been performing, you know, for past 2 months from Jan all the way to Feb right now, it's been performing very, very well. The reason why it's performing very well, a lot of companies, they've been producing the earnings, proper positive earnings, right? We saw Google Alphabetical bringing the earnings that are actually surpassed the estimation. We saw for the past 2 weeks, we saw Tesla coming with the earnings, which is, they were actually, you know, on a level of what they were estimated. We saw companies like eBay, we saw companies like Nvidia, you know, which is one of the biggest company producing the chip of what we use in terms of the phones, computers, and so on and so forth, bringing the positive, you know, earnings. We saw companies double their earnings in terms of the results of that, especially of that companies. We saw companies that like electromobile companies, you know, DIY from China, bringing a different type of, you know, I mean, the better earnings results in terms of the fourth quarter of their companies. So all these companies, most of these companies, they're actually listed on a NASDAQ. Some of them, they're listed on a USDT. But the biggest one, it's a S&P 500. And again, the S&P 500, these are the big entity that measures these companies in terms of their earnings. So we saw S&P 500 getting to the all-time high, the mark, which was 5,000, you know, dollars per that stock in a stock market, right? Which is all-time high. Once S&P 500 get to that level, definitely we should understand that each and every indices like NASDAQ and USDT, it is going to go up. That is why we're seeing NASDAQ right now on a chart, it touches 18,000. 18,000 is really, really high, you know. I remember when NASDAQ get to 12,000, I think that was during COVID-19. It pushes to 12,000 to 13,000. A lot of people, they were excited. A lot of investors, they were really, really, you know, excited about that. But look at what is happening now. It gets to 18,000. That is why I'm thinking the highly possible is that NASDAQ in 2 or 3 months, it might get to 20,000 mark. Mark that. All right. So right now we can see NASDAQ is sitting above, close the price at 17,900. This is clearly that when the GDP, you know, drop. But now here's about the tricky about US information that are coming for past 2 weeks. All information has been positive. Non-farm payroll has been surpassed the estimation numbers. It means they employ more than what they were expecting. Consumer price index has been surpassed what they were expecting, right? So everything that is happening in a market in terms of the US, they are surpassing what they are estimating. What exactly what it tells us? It tells us that the Federal Reserve, they're actually preparing to draw the interest rates so that things can be much more easier, right? So now, do I think the GDP is going to push the price of NASDAQ to drop all the way down to 17,000, maybe 17,200? I pretty much don't think that way. I think the market will drop maybe, let me remove this line, maybe to this zone. Okay, maybe to this zone. This is why I think NASDAQ can actually push, but this should be your first indicator of a take profit, right? Once the market touches here, whether if you're already in trade, you can take your money, or you can enroll more trades, especially if it breaks, and hoping the high possible position of 17,328, 17,328. So these are positions that you can be able to start marking this position and be able to start capitalize in terms of a small profit, right? So you can put your take profit number 1. Once you get there, you push your take profit to this level. Once you get there, you push the take profit to other level. Or you can put a take profit. Once you get there, you close, you take your money, you enter another trade. If it breaks, you target this position as another take profit all the way to all the way to this level. So there's the, if you look at it, if you actually put a market on a range and put it on a bracket, you realize that there's a lot of opportunities that you can be able to enter and make something out of it, depending on how much money you can be able, to deposit. But by the way, if you are actually trading with a 360 capital, you should know that you can be able to get a 50% bonus, right? You can get a 50% bonus when you deposit from a minimum of $100. Just $100, you get another 50%. So you have 150 on your equity. You have more margin for you to enter this type of opportunities for you to be able to make money. And again, to those who are beginners, guys, if you are a beginner, deposit $150, you're going to have the access of getting the ebook that has all information about trading, right? About, especially if you're a beginner, you need to learn a little bit of more, and be able to have more information so that you can be able to capitalize in the market. So opportunities are there. There's an ebook that you can get for just $150. There's a 50% bonus that you can get for just $100. I mean, why not? Put some money and trade. Here's the opportunity. All right. So moving on, we're getting to all the way to Thursday, and this is where we saw German CPI coming on, and we saw again Euro GDP exactly again coming on. So when we look at the German 30, look where German 30 closed the price at 17,402. Where exactly we think the high possible position it's actually coming. The market has been actually bullishing for the past 2 weeks. Crazy times, man, crazy times. A lot of people have been thinking that the market will drop, but the market continues bullishing. But anyway, German 30, this is what I'm expecting. I'm expecting German 30 to drop to 17,298. 17,298. But here's another key point that I need to highlight for you guys. If you don't notice this, then you must deposit $150 and get the ebook. Maybe you can learn more. All right. The reason why I'm putting this is because of this gap. You see this gap? It actually tells you that the market has gapped out from this position to another position. Now, when it comes to when you study this industry, what it tells you is that once the market gaps, we are expecting the market to recover the gap, right? So we are expecting the market to drop and recover the gap all the way to this position. That's where the market is going to happen. Whether it's going to happen Monday, Tuesday, Wednesday, but the following week, we are expecting the market to drop to actually recover. It hasn't been recovering this type of a gap. So this is opportunity for actually people to enroll trades on the German 30, take advantage. This is the take profit number 1. You can be able to take advantage. If you go to 15 minutes, you can see it's a couple of moves, you go to 30, and this is the take profit number 2, number 3, number 4, number 5, the last one, because of we want to cover the gap. Again, the same principles. Once it breaks, you can enroll more trades. Once it's resisting, because it might come Monday, pushes the price here, resisting a little bit, go up. Tuesday, Wednesday, pushes the price to 17,200, resisted a little bit. Thursday, all the way up. Friday, starting to recover, going all the way up again. So it's the whole week of opportunity that we can be able to jump in a market and be able to start making money. So yeah, guys, we've been looking for a couple of instruments. We look also in terms of the high impact volatility that are coming. I think the market is clear from following week. There will be a lot of opportunity, and definitely we're gonna be able to bring this type of videos more often. You just have to keep on subscribing on a 360 Capital YouTube channel. You're gonna see all the content of how the market is looking, in terms of the following week. It's very important to prepare ourselves before we get to that week. All right. Lastly, there's not much actually, to say. We check everything. We're going to see you the following week and see how the market is actually, looking. If you don't catch me on a 360 Capital, you can always catch me on a daily money market on a YouTube, right? If you don't catch me on a 360, go check it out, the daily money market on YouTube. You'll be able to see everything in terms of the trading. But guys, do not forget that $100, you get 50% bonus. $150, you get the ebook to learn. All right. Thank you very much for tuning in. Thank you very much for watching.